If you clicked on this video, I'm confident to say that you're trying to become a profitable trader. You have likely jumped from strategy to strategy trying to find profitability. Well, this video will help you get off that hamster wheel. Let me ask you this. Why do you think there's trading firms out there paying traders to trade their money if a bot can just trade it for you? Why do you think there's YouTubers out there posting multiple strategies, yet there's so many traders that aren't profitable? I recently backtested one of my strategies and it was profitable, but it was almost impossible to bring it to the live market. And it wasn't just about my psychology. Sure, it had its impact, but the strategy itself wasn't efficient enough, which made it very hard to bring it to a live market. So I started having a lot of questions like, why is that? Why can't I make something that's profitable in a backtest, profitable in the live market, even when my psychology is in check? That's when all these questions started to dawn on me. Why does it always feel like something's missing? Why are all these traders strategy hopping trying to find profitability? So at this point, I did what anybody else would do. I got on YouTube and tried to find some answers, but I was met with the same thing. How to trade this strategy in 17 minutes. This indicator will make you profitable. Now, I'm not saying these people are frauds at all by any means. A lot of the time, what they say actually has some weight to it, and it's clear why they do it. It's clickable content and it helps the video perform. This led me to look deeper into my trading and these videos, and it all came down to one thing. Real trading requires something no one can teach: discretion. Becoming a profitable trader isn't about finding the perfect setup. It's about building your intuition, discretion, and adaptability within the market. This isn't me saying don't have a plan or a strategy at all by any means. But what I'm trying to say is that if the chart's not looking right or something looks a little bit different, the edge is knowing when to break those rules. For me right now, I'm working on building my discretion around when my strategy actually has edge in the market. So having that discretionary understanding on when I should actually be trading that strategy or when I should be either on the sidelines or trading a different strategy completely. But this isn't the only time that discretion's actually come into play for me. There are times where prices come to a level that I've marked up and it reacts and responds a certain way. This indicates to me that it's a high probability for my edge to play out in this particular setup. What this allows me to do, it allows me to risk more on that particular trade, allowing me to achieve bigger profits. Most people out there may know this as dynamic risk management. So you're probably going to ask now, how do we actually build discretion in the market? These three things have helped me the most. First and foremost, pick a strategy and stick to it. I actually recommend not copying a strategy and figuring one out for yourself. It's always going to be a lot easier to trade a strategy that you've picked up yourself that's natural to you when you're looking at the charts, rather than just trying to copy a strategy that you've learned off someone. Now, if you're going to copy off someone, at least know that they're a reputable, profitable trader. Otherwise, you're already off on the wrong foot. Once you've got that strategy, commit to it, backtest it, get used to it, get close to it, really understand how that strategy works. You can backtest it, you can paper trade it, whatever you need to do to really feel connected to your strategy and feel confident in how price moves in accordance to your strategy. The markets are an emotional place, and oftentimes the patterns that you see in the market are only reflecting the emotions of the market participants. Let me give you an example of this. So when you've got a range-bound market, what do you think the market participants are feeling at that point in time? They're feeling uncertainty. A lot of the time, people are jumping in and out of trades. They think it's going long, but then something tells them it's going short. So that's why you get that price jumping up and down in that range. By journaling your emotions, it allows you to pick up on them at particular points in time. So for example, if you are getting chopped in and out of trades and you feel that emotion of uncertainty, you can pick that up. But instead of picking that up and making the same mistakes where you're over trading, you're getting wicked out, and you're just losing all your capital, you can actually notice that emotion and rewire it. Notice that emotion and stop trading, or trade a different strategy when you know that strategy works best in those sorts of conditions. Also, journal market context. So instead of looking at just your perfect setups or where your perfect setups may have played out, understand what the market context was as well. Discretion in the market often comes from understanding what market environments aligns with your strategy or affects it. Last but not least is screen time. Now, I know none of you want to hear this, but you really do need thousands of hours to become a profitable trader. If you can't accept this, you should probably walk away from the industry right now. You need as much screen time as possible to find out what works for you. You're never going to become a profitable trader trying to follow somebody else's strategy where they might have a completely different personality than you, so it suits them so much better. I found that even after doing courses, reading books, I had to really create which way I saw the market. That way it helped me It helped me see my setups. Otherwise, I would just miss them anyways because I'm only trying to copy how somebody else thinks. You really need to build your strategy based on how you think. Otherwise, you're never going to become profitable. Since having this realization of discretion and how it plays a huge role in my trading has improved immensely. All I can say is that you really need to spend time getting personal with your strategy. You need to really understand it. Otherwise, you're just going to consistently make mistakes or miss setups because it just doesn't fit right for you. Please take the time to build your discretion. It will take hours and hours of screen time. I personally have only just recently kind of clicked and seen this. It wasn't just overnight, but what happened is it really started to build, and over time, you really start to realize patterns and different nuances in the market that help you work out what trades will work best and what don't. If you're a novice trader like me, the best place to build your discretion is paper trading. But before you jump straight into it, watch this video here. It should help you get the most out of your time you spend on paper trading. I hope this insight might just be the missing piece in someone else's journey as it was for me. I'll see you in the next video.